Welcome back. I hope you're having a fantastic day. We are going to jump in, take a look at Bitcoin, crypto, and the stock markets here. And Jerome Powell testified today. The Fed did raise rates 1/4 point. So they are targeting 7 more rate hikes, 6 or 7 more rate hikes the rest of the year, targeting a Fed funds rate of 1.9% by the end of the year. So that will affect a lot of things. It'll affect credit, consumer credit. It'll affect mortgage rates, which are already on the rise, which is affecting the housing market. We're starting to see some effects in the housing market here and there throughout the country. Of course, other markets are still red hot. So you should start to see as rates go up, mortgage applications decline, home builder sentiment decline, inventory levels potentially rise, and prices of housing starting to roll over and come down. And like I always say, if you're looking to buy a house, watch the home builders. If there are home builders in your area building in subdivisions, if they are starting to have inventory that's not selling or getting pushback from buyers, they will reduce prices fast to get rid of inventory. So that's where you can get your deals. And as interest rates rise, prices will come down because people generally are buying payments that are financing houses. So, that is what we're looking at. And the Fed did signal that they are willing to sacrifice growth to stop inflation. They are not projecting that it's going to affect growth right now. They still think that we have a strong labor market, we have a strong consumer and a strong economy, and they are expecting inflation to start come down by the end of the year. So they do not anticipate rate hikes affecting growth right now in the near future. So interesting times out there. We still have the war in Ukraine and a lot of uncertainty there, whether that's going to escalate or end. There were talks of peace being struck or a peace agreement being struck earlier in the day today, and the markets were up on that news, and maybe even last night. And then markets sold off going into Powell's testimony. And then when they hiked the rates 1/4%, markets came back again because they did what they said they were going to do. They provided the guidance moving forward, and they also, gave investors clarity on what they were thinking in terms of balance sheet reduction and all that. So this rate hike was definitely priced into the markets. What's not priced into the markets is the real effects of inflation and the real effects of interest rate hikes on the consumer as we go along. So those are the things that are going to have to work their way through the markets. We could potentially see a down day tomorrow. We've had a couple of up days here, so tomorrow could be a down day. So we'll just have to see how the futures roll out. And again, the market is still very sensitive to what's going on in Ukraine. Any sign of good news, markets are rebounding. Any sign of escalation or bad news or no peaceful resolution, the markets generally are selling off. And Bitcoin's been kind of following suit. Bitcoin is up today on all the news, just like the markets. And this is the pennant that I'm following here. And I like to use the closes because these wicks a lot of times can be very deceiving, in wicking out, liquidating stops and things like that. But the closes are what I'm kind of targeting. We're still hanging on that. We're still above that $35,000 level that I projected would be the low for this range in terms of what we're looking at, what we were looking for that retracement that we have not seen yet. But right now that $35,000, $36,000 low is hanging in there, and price is kind of respecting this trend line, putting in those higher lows, but at the same time, it's been kind of putting in the lower highs as well. So the question is, what is this going to look like when it finally resolves at the end? And generally, these types of things will break out lower when they're done. That rising pennant like that, this, bull pennant or bear pennant, I guess you could call it. But a lot of times these will typically break down. But again, the markets are very sensitive to any kind of news, any kind of information or changes. The Ethereum price kind of is doing the same thing, putting in the same kind of a pennant from this price action and cycle that we're seeing here. And then of course, when you go back and you look at Bitcoin on, let's take a look at let's remove that. Take a look at the moving averages that we've been tracking. We're still below all the daily moving averages, although Bitcoin is trying to close above the 50-day moving average and kind of test that. And anytime prices kind of wrestled with that and breaks below, generally you'll trend down and test that, get below that 100, 200. But if you look at it on the weekly, again, that's what we've been tracking there. The big thing is for Bitcoin to get above that 50-week moving average for any kind of longer term, continuation. And if it does not get above that 50-week moving average, it potentially will break down and touch that 200-week moving average. So that's kind of what we've been tracking on the downside there. And then of course, the other thing is the bull market support band still has not gotten back up to test the lower level of that bull market support band yet. So we will have to see how price shakes out there and what that's looking like. And again, I like to use these closes versus the wicks because I think they're more relative of where price really is and what price could potentially be doing. And I think that it seems like Bitcoin is wanting to keep this base intact, that it does not want to go back down below that $35,000 level. And with the guidance from the Fed, clarity from the Fed, regulation headed towards the space, and clarity behind regulations and things like that for the institutions, we could get more institutions in the space, more capital in the space. And the other day I was talking about what could, there's no catalyst to really drive Bitcoin, exponentially to higher levels. And the reason I'm saying that is because what does it take to drive, drive the price of Bitcoin? What do you need in order to, get back into a bull market? And, obviously you have your on-chain, your on-chain metrics, which are always bullish, always look good. You have your fundamentals, which are always good, always look good with more adoption, all the different things are going on in the space. But at the end of the day, what it takes to drive price is capital. You need capital entering into the space. So even though the on-chain analytics looks good and, more whales are holding and, things like that. And again, that can be easily manipulated. It's a lagging indicator, but it always looks bullish. On-chain almost always looks bullish. Even in a bear market, on-chain looks bullish. Just because stuff's always moving in and out on chain and you just never know whose wallet is who and what stuff is doing. The fundamentals are always bullish as well because you have more adoption, you have more people coming into the space, more capital coming into different areas of crypto, into the different tokens, the different projects, things like that, and more institutions. But the key is you got to remember, it's not what they say, it's what they do. So the reports are, different institutions are setting up shops, setting up trading desks, setting up funds. The funds that are being set up are going into companies and they're going into different assets. It's not just Bitcoin, it's not just Ethereum, it's getting spread out. And different investment banks are setting up trading desks. So they're setting up desks to trade in and out of the market, not necessarily buy and hold exponentially. So what you need is you need more capital coming into the space at scale, which is what drives price ultimately. And a lot of the retail people that got in the market over the last year or so got in at the top. So they're kind of gone. And, if price gets back to those levels, a lot of those people are going to sell. So you need a whole new group of people coming in from a retail standpoint to drive those big parabolic moves in order for price to really exponentially go up. So without a big retail population interested in the space right now, and with the value proposition and risk reward being that Bitcoin was at 64, dropped, 69, dropped, retail looks at that and says, wait a minute, this doesn't make a lot of sense. Institutional investors are seeing the same thing. So what they want to do is they want to get they want the regulatory guidance and clarity in place so that they can understand the rules. And then they can allocate more towards the space and price can kind of start to creep its way up. So what I'm expecting is more of a consistent, lower, higher highs than what we've seen versus these big parabolic moves. So lower incremental increases in price. So the next level is 75.80. Then we get a little bit of a retracement back to a higher lower level. So right now we're at that 35 is kind of holding. It was 30 June, July. We went to, we went from 64 to 30, then 69 to 35, then maybe we go to 75.80 to 40, then maybe you go to 100 to 45, and it could kind of work its way like that until that range tightens to where maybe you're going, 80, 75, 80 to 50, 60, 90 to 100 to 60, 70. And then you start creeping your way up that way. And how high will it go? I don't know. Nobody knows. I mean, there's a lot you can guess, and you can say it goes to 500, goes to 1 million. You can say whatever you want. All we know is where it's gone and where it is. That's all we know. And how much is somebody willing to pay? Whatever they're willing to pay, risk reward, that's what investors are looking at. What's your upside potential versus your downside. And they're looking back, well, where has price gone recently? Up or down. So that's how investors measure risk reward of the asset. So right now, that's kind of what I'm looking at. Price consolidating, where you have consistently higher lows and higher highs, but less exponential parabolic moves and dramatic drops in either direction. And, in the past, Bitcoin's dropped, 70, 80%. And now we're in those 50, 60% ranges. So it's kind of consolidating. So that's just Bitcoin. Ethereum's kind of in that same camp as well. Altcoins are a different story. A lot of the altcoins are already down 60, 70%, 80%. A lot of those will probably go down another 40, 50% from here. We're still looking for an altcoin season. I think my philosophy is that already happened back in October, November, after Bitcoin topped. Altcoins all kind of topped at the same time. A lot of them went on a run back then. Not every one of them, but most of them. Some of them are still running now. So are we going to see another altcoin season where everything just kind of goes nuts, 5x, 10x, that kind of thing? I don't know. Generally, that's what happens when Bitcoin retraces. But we've already gone through that cycle. The economy still has a lot of headwinds. We have different interest rate policy. We do not have an accommodative Fed anymore. They're going to unwind their asset purchases, raise interest rates, which affects credit, which affects liquidity, affects a lot of different things. So we'll just have to see how things settle in. But that is my update today. That's what I am looking at and looking for. And I will see you on the next video.